I now going to introduce Miriam Sandkuhler, who's the CEO of Property Mavens, based in Melbourne, another award-winning buyer's agent and also a best-selling author of a very, very good book on property investment. Miriam, how are you going this evening?
I'm good, thank you, Terry. Thank you very much for having me.
That's okay. And we've just talked about one of the two great obsessions of property media at the moment, which is Sydney. Of course, the other great obsession is Melbourne, and justifiably so to a certain extent, because Melbourne's been doing some amazing things with its market, very much following the pattern of Sydney. There was 4 or 5 years of strong growth, a correction, but now it seems, if media is correct, that the surge is back on again. What are you finding at the coalface?
Well, definitely that's evident in the coalface. I mean, certainly there has been an increase in consumer sentiment and a lot more activity. The CoreLogic data that's come out has basically been saying that Melbourne's been the best performing capital for price growth for the last quarter, and that's very apparent while we're attending auctions and seeing prices go substantially over the top of the quote range. Last weekend, or this weekend just gone, we had a 78% clearance rate. So we're not quite at those boom levels yet. They were around those 88% clearance rates, but we're sort of just nudging and heading in that direction. Certainly there are more properties that are selling prior to auction. A lot of the time now people are thinking, if they can, that buying before auction is the way to go so they don't miss out at auction. And a little bit like what Rich was saying, you know, people who are really frustrated by missing out time and time again do have a tendency to pay a premium when they go before auction, but that in itself can be a little bit dangerous. You know, certainly if there's a lot of interest in the property, generally agents and vendors will take it to the market. If there's not a lot of interest in the property and someone's willing to pay a silly price before auction, well, they'll take it. So it's not always the right strategy, but it's definitely more of that that's becoming apparent. Certainly in Melbourne, there was a lot of stock coming to the market in late spring, and we've had low stock levels as well. But those properties coming to the market in late spring has resulted in a lot of auctions happening towards the middle and end of December, even a lot of twilight auctions happening midweek. So that's certainly been apparent. What else have we had happening? Yeah, look, it's just been very strong. I mean, we've had some really strange results. We've had some unexplained results. We've had extremes over reserves, even as much as $1 million at a time. I've seen properties literally increase from one property where 3 months ago it was $580,000 to the one immediately next door with multiple bidders, you know, 5 bidders bidding on it within 3 months, having sold for $700,000 under auction conditions. That's a 20% increase literally in 3 months. So we are seeing some very extreme results. And of course, if it's an A-grade property, that always tends to attract more people who pay a premium and you know, compete under competition and get very emotional about it.
I talked in the beginning in my introduction about some of the background factors that have increased sentiment in real estate, and we've seen a gradual pickup in markets. What do you think the biggest drivers are in Melbourne that's creating this resurgence?
Well, definitely there's FOMO. You know, it wasn't that long ago that we had a peak market, and plenty of people are remembering what it was like to miss out there. Low interest rates have helped. You know, obviously the election results helped. Things such as mortgage, you know, lending assessment criteria softening a little bit and allowing people to come back into the market, and particularly first home buyers. So where we're seeing the most activity, basically it's starting to take off around that $1.5 million mark. Certainly the properties that are performing are 3 and 4 bedroom houses in the middle ring suburbs with leafy streets for families to move into. We're also still seeing a lot of activity around that $750,000 to $1 million mark for first home buyers, because they've got the bank of mum and dad coming in to help. And sometimes the bank of mum and dad get extremely emotional for their children, on their children's behalf. So I have witnessed parents overpaying for property on behalf of junior as well. And then of course under that $750,000 mark, you've still got your first home buyers and your investors as well. So there are a number of factors that are coming into play. Certainly there is potential for things to change if we have certain experiences happen in the economy. I'll just take a step back before I talk about that. What we have got a noticeable difference is we don't have the Chinese investors like we had a number of years ago. They have slowed down in the marketplace here, but we are seeing investors from Hong Kong coming in. However, they're coming in off a much smaller population base than obviously China. So they are starting to show and they are starting to compete for property, and there is a little bit of price going up as a result of that too.
Yeah. So clearly a major resurgence. I always tend to discount to a certain degree what media is telling us, but it's certainly true that the Melbourne market is coming back very strongly, and we're seeing very strong bidding at auctions, strong pricing being achieved. What could upset the current conditions in 2020?
Well, I think barring any major financial or economic occurrences, I mean, I know there's Brexit at the moment, there's the election, there's the USA-China trade wars. I mean, we're still susceptible to what happens in the global economy. So assuming we keep tracking along as we are and nothing out of our control happens, there's no real anything in particular that's necessarily going to undermine the market to continue to perform as it has been. But tight stock levels are having a major issue. Properties are passing in because there are vendors with unrealistic expectations. I mean, you'll always have buyers with unrealistic expectations and vendors. So we're seeing the vendors that are jumping on board, who do particularly want to take advantage of the market. Sometimes their expectations aren't meeting reality, and those are the properties that get passed in and sit around and eventually, may sell. But conversely, if properties are priced properly, they go. Again, like Rich mentioned, agents are having challenges pricing property, but we are still seeing evidence of underquoting, because when we're doing comps, we're very easily able to see that we're finding properties that are actually comparable at the top of the range, at not the bottom of the range, the actual top, and then we're pricing properties over the top of the quote range. So, yeah, pricing, like anything, always will be the biggest challenge, particularly in a rising market, and this is where primarily buyers are going to continue to miss out if they don't know and understand how to price property.
Yeah. Sahara's come in with a question for you, Miriam. Says, I remember 2015 were crazy days in Melbourne. It took us 9 months to secure a great property. Are we looking at a return to this type of bull market?
We're not there yet. It will depend on, again, stock levels. Certainly, even if interest rates slow down. One thing that Sydney and Melbourne do have against any of the other capitals around the country is we have job opportunity here. So there are employment opportunities that will continue to drive people wanting to buy and live and work in Melbourne, and will continue to drive them migrating to Melbourne. So I always look at Sydney and Melbourne as being the London and New York of Australia. You've got two very strong capitals that have both got a lot going for them. You've got Sydney, which is basically the financial capital of the country, and then Melbourne in terms of our ability to expand and grow as a city and eventually overtake Sydney's population, because we're not geographically trapped like Sydney is. We have a lot going on here. We've got very strong performing regional centres, as you know, like Geelong and Ballarat and Bendigo. We've got a lack of affordability pushing people from Melbourne to those regional centres, and there's a lot of job opportunities going on there. We've got a lot of infrastructure going on in Victoria. So there's no reason for it not to continue to the way it is, but if it's going to be a boom again, well, we get to see what plays out.
Yeah. Now, I was going to turn our attention to some of the regional markets a little bit outside Melbourne, because I know you're very active as a buyer's agent in some of those strong regional cities. And Jared, who's watching us via Facebook, has asked, what's your view, Miriam, regarding the regional centres of Victoria, Bendigo and Ballarat in particular?
Well, certainly I've been buying in Ballarat for the last 6 years. I specialise in buying high-performing investment-grade properties that outperform the market, and I've got 6 years' worth of case studies showing some clients who've been earning 69% capital growth, whereas the market median's performed at 29%. So, again, I'm buying in Bendigo for similar reasons. Ironically, people are outpriced in Geelong, buy in Ballarat. People who are outpriced in Melbourne buy in Geelong and Ballarat and Bendigo. People who want a tree change are going to Bendigo. People who are outpriced out of Ballarat are going to Bendigo. So I have nothing to indicate that growth won't continue. There's a lot of infrastructure development going on in Ballarat and Bendigo, and Bendigo is super tight at the moment. Vacancy rates are incredibly low. Local agents are losing their rental stock because families are taking their investment properties off them and giving them to the kids to live in, because, you know, they're moving out of home and there's nowhere to move. So if you're able to buy in that market and get your hands on some stock, you've probably got no worries whatsoever in terms of renting it. And again, Ballarat's showing a very similar story.
And you mentioned people being priced out of the bigger cities, going to some of the smaller regional ones. And of course, price is one of the great attractions of buying in markets like Ballarat and Bendigo. Realistically, in the current market, what sort of price does it take to get a good, solid investment property in those regional cities? Yeah,
look, I'm working with clients who've got 330,000. I'm working with clients who've got 600,000. So if you know what you're looking for and you're picking A-grade properties, you know, you can do it for as little as 300. But again, you've got to be careful about what you're picking and where you're buying it. So there are always areas within cities like Ballarat and Bendigo to buy in, and then there are the pockets and the areas to stay away from. And of course, you've got to look at multiple growth drivers and why certain pockets are performing better than others, and look for multiple reasons to be buying in those pockets and those suburbs, not just the fact that it's performed incredibly well last year. There's, you know, certainly I don't work on the basis that past performance will guarantee future performance. It always comes down to multiple growth drivers and making sure you're buying an investment grade property with the right attributes to, you know, give it the best opportunity to grow in value.
Yeah, what we've seen happen with our research at Hotspotting is that initially it was the regional cities closest to Melbourne that surged first. Geelong had perhaps 3 really good years, and we saw Ballarat and Bendigo. We've seen growth ripple further and further out across Victoria, which is in itself a very strong state for economic growth and population growth. So more and more centres distant from Melbourne are getting double-digit growth. What would your recommendation be? Would you suggest that people go further out for perhaps more affordability, or should they stick to those stronger regional centres close to Melbourne?
Well, I personally won't buy in a regional centre with less than a population of 90,000 people, because that's where the jobs are. You know, if you are seeing areas growing with double-digit figures, you know, a lot of it could be driven by investors. If it is driven by investors, well, that might be concerning if there aren't a lot of employment opportunities in the area. Because you need people to have access to amenity. They need to have access to hospitals and schools and public transport and train lines that will take people back into Melbourne. So, look, we've been buying in areas, you know, we've been buying for home buyers sitting in areas between Ballarat and Melbourne, because that's a lifestyle choice for them, but I wouldn't necessarily do that from an investment perspective.
Yeah, there are a lot of wonderful small lifestyle towns in that area.
Yeah.
And I think it's not just investors that are buying in these cities. You'll be buying for home buyers as well, because cities like Ballarat or some of the lifestyle towns you refer to are commutable for people who still have jobs and careers in Melbourne.
Absolutely. So I do work with a lot of home buyers in, say, Ballarat, for example, and they either work locally or one partner works locally and the other one will commute by train to work. And it's a better commute on the train for an hour and a quarter reading a book than it is sitting in traffic for 2 hours and maybe driving in from Melton, or even driving in from Point Cook, which is only 25 k's out of the city, but they don't have the train line there to support them.
Yeah. Once again, it's amazing how quickly 15 minutes goes by. I wish we could talk for longer, because not only am I fascinated by the Melbourne market, but I'm really interested in what's happening in regional Victoria. I think it's been, generally speaking, the strongest market in the country for the last couple of years. There's been some wonderful growth stories happen there. Thank you for your contribution, Miriam Sandkuhler. Anybody would like to follow up and speak to Miriam and perhaps engage her services as a buyer's agent or an advocate in other ways, the contact details are on the screen now. And I think you also, before I leave you, Miriam, you've got a special offer on your very good book on property investment.
Absolutely. So I think Katie's got the link. to send everyone after this presentation. If anyone wants to buy someone the gift of education for Christmas, I'm offering my best-selling book and hard copy for $19.95 instead of $29.95. And there's also a link where you can buy my book on Amazon for Kindle for $3.99. So, yeah, more than welcome to get in contact with me, or rather click that link that Katie's going to send through, and happy to post the book out. And if you'd like me to initial it or autograph it, for want of a better word, let me know.
Okay, Miriam, just before I let you go, Sahara has written, "Thanks, Miriam, you're looking great, just like Melbourne."
Oh, thanks, Sahara. That's very kind of you.
And thanks, Miriam, for your contribution tonight.
You're very welcome, Terry. Merry Christmas, everyone.